Go beyond market headlines to understand the reasons for the day's movers and shakers. And get your portfolio ready for tomorrow. Beaming live from the CNBC-TV18 Motilal Oswal studio.
Bit of a mixed opening. Taiwan index 0.5% of gain there.
So there is interest at lower levels and buy the dip kind of sentiment which is there.
For me, the outperformance between China and India this year has been so dramatic that I would be looking to rotate back into India.
25,760 is where we are at on the Nifties. It's absolutely unchanged right now.
There are quite a few IPOs coming up, quite a few players looking to raise capital for their own growth plans, and luckily, market environment is quite conducive.
Looks like Q3 is certainly going to be better than what we have done in H1.
We are able to deliver 25 to 30% kind of a growth rate on the base effect basis.
In tea, we are at 2022 share player.
Mildly lower for the benchmark indices at 11 o'clock. The Nifty is at 25,700. In India, what we are basically seeing is this premiumization.
4,521 crore, the net profit higher than what analysts were expecting. Marginal improvement from the previous quarter, 20,160, the net profit figure.
Okay, it's not a great looking screen up there. 25,600 is where we are at the day's lowest point, last hour. Coming up here on Closing Bell. We're coming to you from the CNBC-TV18 Motilal Oswal studios. Numbers are coming in. Torrential flow, really. Alembic, SBI earlier, Mahindra & Mahindra, and a bunch in between as well. I'm Prashant. With me, my colleague Nigel. Hi.
Well, hi, Prashant. Numbers are coming in thick and fast, and actually the numbers are looking quite good. Whether you look at the headline index as well, you had Mahindra & Mahindra, SBI, Thangamayil Jewelry, they came out with a set of numbers. Smaller cap name, numbers are good. Street is reporting it. Yesterday up, today up. LG Balkrishna, smaller name again, auto ancillary name. Street likes it. The stock as well is rallying for the second day running. So that's a good sign, I think so. Yeah. The markets are a little under pressure today because we have the weekly expiry as well that will play out in the next 60 minutes or so. And also we had, to add to the excitement, you had a big deal that's announced in the metal space. We'll explain it to you in just a bit. Infra is the stock that's reacting to that. Initially saw some profit taking. Now the street is coming to terms with it. So we're getting a day off tomorrow, but full of action. Results, deals, weekly expiry, a lot going on there. Yeah, street is digesting that deal right now. Stock moving to the day's high.
Absolutely. And I think as we kick this off, right, SBI, which reported numbers, the management is sitting down for a press conference. So why not hear from Mr. Sethi?
At the outset, I would like to thank all of our customers, employees, shareholders, and regulators for their continued trust and support. We remain committed to supporting India's growth story while maintaining sustainable value for the bank. The results for Q2 FY26 demonstrate our healthy growth across business segments, robustness of financial numbers and asset quality, reflecting the strength of our franchise and the trust of our customers. I will first start with a brief description of the present global and domestic economic scenario and will then discuss bank's performance. The global economic outlook for 2025 presents a picture of modest but uneven recovery. The IMF's World Economic Outlook, October 2025, projects world GDP growth at 3.2% and 3.1% in 2026, reflecting steady but subdued momentum amid persistent structural challenges. Regarding inflation, though it has broadly moderated across most economies, the pace of disinflation remains slow. Against this global backdrop, India's macroeconomic outlook remains one of cautious optimism, underpinned by robust domestic demand and easing inflationary pressures. The RBI projects real GDP growth at around 6.8% for FY26 and 6.6% for FY27. Growth is being supported by strong investment activity, recovery in rural consumption, and buoyancy in services and manufacturing. The GST 2.0 reforms are expected to boost private consumption and domestic demand. On banking front, Scheduled commercial banks' credit growth is slowly picking up and grew by 11.5% year on year. Last year it was again at the same level for the fortnight ended 17th October 2025. While deposit growth remains sluggish at 9.5%, which was 11.7% last year. Going forward, we expect demand for credit to continue in the second half of the financial year. By looking at the trend, deposits and credit growth of scheduled commercial banks may remain in the range of 11 to 12% during FY26. However, risks persist from volatile global commodity markets and potential spillovers from trade disruptions. Overall, India's near-term outlook is strong, with macroeconomic stability providing space for sustained medium-term growth. Coming to SBI, the results for Q2 FY26 reflect the bank's consistent financial performance for the quarter, driven by healthy growth in SME, agriculture, and retail advances, improvement in asset quality, and strong operating profit. These advantages stem from our institutionalized framework, maintaining prudent risk management practices, digital initiatives which continue to gain traction. I'm happy to share that our total business has crossed 100 trillion rupees for the first time, and this shows the customers' trust in us. In fact, I would like to say that 100 trillion does not sound great. It should be 100 lakh crore rupees. Then only it sounds heavy, right? And the deposit growth, in terms of the performance, the total deposits have grown by 9.27% year on year and crossed 55 trillion, is currently for 55.92 trillion. Term deposits have grown by 9.91%. Our current account deposits have witnessed a robust growth by 17.9% year on year, and CASA deposits have grown by 8.06% year on year, with CASA ratio at 39.63%, an improvement of 27 basis points over the previous quarter. Bank's current account deposits growth has continued to remain strong during the year, despite competitive market environment. We have taken several steps to strengthen our liability franchise. Our foreign offices deposits have grown well at 11.76% on year-on-year basis. Domestic advances have grown by 12.32% year-on-year. Our RAM portfolio, again, is a milestone, has crossed 25 lakh crore mark, and the credit growth continues to be robust across all segments. SME, agriculture, and retail personal have grown by 18.78%, 14.23%, and 14.09% year-on-year respectively, all registering growth in double digits. The corporate sector has grown by 7.1%. Our foreign offices advances have also grown well by 15.04% year-on-year in rupee terms. The domestic credit deposit ratio was at 69.82% at the end of Q2 FY26, indicating sufficient headroom to address future growth requirements of the bank as well as for the economy. I'm glad to announce that we have posted quarterly net profit of 20,160 crores, which has increased by 9.97% year on year. Operating profit for the quarter is at 31,904 crores, which increased by 8.91% year on year. ROA for Q2 is at 1.17%, which has improved by 3 basis points on quarter-to-quarter basis. Our asset quality continues to be industry leading. Our gross NPA ratio has improved by 40 basis points year on year and stands at 1.73% as at September 25 and continues to be at its lowest level in over 2 decades, which demonstrates the quality of our loan portfolio, the robustness of our underwriting processes, and collection efficiency. Our net NPA ratio has also improved by 11 basis points and stands at 0.42%. The slippage ratio for Q2 was 0.45%, while the credit cost for Q2 stood at 0.39%. The NPA book has been well provided with PCR at 75.79%. The bank remains well capitalized and we have sufficient headroom to take care of normal business growth requirements. Our capital adequacy ratio has improved by 86 basis points year on year and stands at 14.62% against 13.76% a year ago. Common equity tier 1 ratio has also improved by 152 basis points to 11.47%, and both the ratios are well above regulatory requirements. As you are aware, bank has raised 25,000 crores capital during the quarter by way of QIP. We are making continuous progress in digital banking, which is an important customer acquisition engine for the bank across asset as well as liability products. More than 9.35 crore customers are registered on YONO, driving digital agenda of the bank. 64% of regular saving bank accounts were opened through YONO in Q2. The share of alternate channels in total transaction increased from 98.2% in first half of the previous year to 98.6% in the current half year. The bank's in-house analytics team has also won an award for Best AI Solution in the CII National AI Awards 2025. Our subsidiaries continue to demonstrate consistent performance and continue to strengthen value for all our stakeholders with their expansion of digital channels, innovative products, and enhanced customer experience. Many of our subsidiaries are leaders in their respective segments, and we are committed to nurture these subsidiaries and maintain leadership position in the respective businesses. We are glad to report that bank continues to report ROA greater than 1%, and our ROE was at 20.21% at the end of Q2 FY26. The bank's return on equity profile is currently higher than its credit growth, implying CET1 accrual in the future. SBI continues to be the market leader in deposits and advances, with total business crossing 100 trillion rupees as end of quarter September 25. Our asset quality reflects the risk-adjusted profitable lending. By leveraging technology and analytics, we continue to be connected to people and a future-ready organization. To conclude, I want to thank you all once again for your support of the bank. We consider it as a privilege to be able to contribute to the progress and growth of the economy. The bank remains committed to rewarding your trust in us with the superior sustainable returns and value creation over the long-term horizon. I wish everyone here the best of health and happiness. My team and I are now open to taking your questions. Thank you.
Thank you, Chairman, sir. We will now move on to the media question and answer. To ensure a smooth and orderly session, individuals will be called by name to ask their questions. We kindly request everyone to please follow the format and limit themselves to maximum 2 questions, focused on the results. If time permits, you may raise your hand to give your interest, indicate your interest, and we will accommodate additional questions. Thank you for your cooperation. And now we will begin with Mr. Piyush Shukla from Hindu Business Line.
Good afternoon, Chairman, MDs. Sir, just one clarity, you have gotten one-time gain of 4593 CR from your sale in Yes Bank, 13%. The overall estimate was that you will get 8819 CR. So the remaining portion of it, will it be realized in the next quarter first? And will you further offload your stake in Yes Bank? Second is on your, do you feel that deposit rates have now...
Okay, well, that is the SBI management, and we'll try and get you sort of more from it in that Q&A, which of course is underway. News at the bottom of the screen, big fundraising. This was anticipated. Adani Enterprises, numbers have come through. Profits are up some 84%, 3,200 crores compared to, it's up 80% basically. And there's a board approval to raise up to 25,000 crores via a rights issuance. Stock, I think, has moved a little bit up and then back down once again. Let's just quickly get the trading strategies out of the way as well. How should you position yourself in the remaining 45 minutes of trade, not an hour now? Mitesh, apologies, coming to you a little late, but how would you play it? And just a comment on the sell-off that we have on our hands as well. 160 now on the Nifty.
Good afternoon, Prashant. So I think we are there at 25,600. That is the level which I was watching, and I'm just hoping that we don't get a closing below that, because then I think it will kind of negate the up move which was there for starting from October first week to about October third week. And this is the level which I would want to see some reversal come in. As of now, I think that bounce back or a reversal sign is still missing. But let's see. We'll wait for the closing, because today is an expiry day. Last half an hour, 45 minutes could really change the picture. Having said that, a couple of power names have broken down, and that's the negative side of it. I have a sell on Power Grid with a stop at about 282.2 for targets of 270, and NTPC is a sell with a stop at 333.6 for targets of 323.
Okay, got that. Thanks a lot for that, Midesh. We'll come back to you. Well, we have Deven Choksi of DR Choksi Finserv, who joins us on the show. Hi, Deven. Good afternoon. Good to see you in. The two big numbers, SBI as well as Mahindra & Mahindra. The markets are at the day's low, but to be fair, both these two numbers are better than what the street was working with. Your reading of it?
Yes, Nigel. Good afternoon. Well, SBI definitely has shown distinctly high amount of loan growth, around 44.5 lakh crore kind of a AUM book size on the banking front, and the retail loan growth has been growing at a rate of around 15% plus for the size of the portfolio that they are having, along with the corporate loan book of around 12%. So certainly, I think the numbers are looking very, very smart as far as I think the growth in the loan book is concerned. But more smarter numbers are largely in the area of the slippages. Probably, I think that is maybe last year and the last quarter also, I think we had a situation, I think, wherein they probably had to report higher amount of slippages, but that's not the case now. So hopefully, if these particular numbers remain under control, then in my viewpoint, I think the subsequent quarter's result could be possibly much better on the slippages front as well as I think the growth front. And with the better amount of, I think, the cost of fund on the liability side, they have actually been able to deliver little better margins also. So I guess I think on all front, the bank possibly has shown relatively better performance, and which promises to remain largely, I think, growth oriented in the coming quarters. M&M, certainly, I think the major benefit is expected to be in the month of October and December quarter. Also because of the fact that I think the entire GST-related sales in the passenger vehicle segment, particularly, I think is getting pushed into this particular quarter, and there the numbers are likely to be very smart. Along with that, I think the farm equipment business has basically shown better numbers in September quarter as well, which is also likely to continue in this quarter. So overall, I think the auto segment of the business, along with the other businesses, I think which the company has in portfolio, they have shown reasonably good size of numbers. So I think the journey should continue, though the valuation is something which is already fairly valued as far as the company is concerned. But I believe that I think the growth should continue given the kind of projection that they have put across.
Okay, all right. Got that. Thanks a lot for that, Deven. Just stay with us. We have a couple of other numbers. Hitachi and 3M, both of them reported their quarter two numbers. Sudarshan is with us to tell us why those stocks have taken off. Street really like those numbers.
So both these companies have reported numbers yesterday, and operationally strong numbers from both these companies. Hitachi revenue was slightly below Bloomberg estimate, but if you look at all the other numbers, profit, EBITDA and margin, they have come sharply higher. On revenue front also, while it was below estimate, but despite that, growth was almost 18%. On the EBITDA front also, there is a huge expansion. It has come at almost 300 crore versus 108 crore in the same quarter last year, and in resultant margin has moved above 16% against just 7% that company had seen in Q2 of FY25. And all these numbers were supported with the order inflow, which had seen a growth of more than 13% YOY. Coming to 3M India, it was an operationally strong set of earnings with all the four segments seeing a double-digit growth. But first, talk about the headline numbers. Revenue has increased by 14%. EBITDA has seen an expansion of 13%, and margin too has risen to 21.2%, an expansion of almost 300 basis points against Q2 of FY25. In the segment, healthcare up 15%, consumer almost 15%, transportation also almost 13%, and safety and industrial more than 12%. So on the back of strong set of earnings, you are seeing a big move in both the stocks.
So thanks very much. Very tight, good explanation to what's happening with both these names. Big moves. Devin, good afternoon. Any thoughts here? Hitachi and 3M. I mean, stocks. Hitachi, of course, we've discussed extensively because the theme has been in so much vogue and such strong tailwinds it's got. 3M lesser discussed.
Prashant, good afternoon. I think in Hitachi particularly, you are having the visibility of a larger order book size. That is very important to understand. And I think the other part is that I think integration of other sources of energy, which are now getting produced from different ultimate other sources into the grid, and I think probably using the IT front as well. So this company has shown a distinctly different kind of a character from a good old hardware-driven business to I think engineering R&D-driven business. I think is something which one is experiencing in this company, which is also partly reflected into the margin front, as I could see at this point of time. So yes, I think though the valuation-wise everything is in price today, but at the same time, I think the growth in the business and the visibility for growth is quite significant in this particular business. We see this continuity for at least the next few years because of the larger order book visibility that we have in this business.
Okay, all right. Let's focus on the new IPO then. Grow's IPO has hit the street today. Retail portion is already fully subscribed within 3 hours of the issue opening. Vinny joins us to fill us in with more details. Vinny?
Hi, good afternoon. So in terms of, like you mentioned, the subscription, retail portion fully subscribed 1.53 times as of 2:30 p.m. NII portion, the non-institutional investor, that's also subscribed around 0.4 times. So interesting subscription already coming on the first day. It's open today, closing on the 7th of November. Fresh issue. 1,060 crores is the fresh issue. OFS is around 55 crores. Anchor investors yesterday already had an investment of around 2,984 crores. And in that, HDFC Mutual Fund, Government of Singapore, Kotak Mutual Fund, Nippon are among some of these marquee investors who already come in there. Do not forget, it's one of the India's biggest stockbrokers. They have 26.3% market share of active NSE clients. This is as of June 2025. Now, in terms of numbers, revenue, Q1 FY26 and Q1 FY25, if you compare that, we're seeing a 9% decline there. Margins have remained at around 56%, while in terms of profits, they are up by 12%. But interesting IPO, everyone's keeping an eye out of this.
I think, and it's coming. So they basically, we spoke with the management. Vinny, thanks very much for that. About 1,800 crores in profits. And to a question this morning when the management came on, they said, well, expect between 25 and 30% kind of growth. So you use that on top of FY25 net earnings. You're looking at some close to about 2,400 crores in earnings in FY26. So on a 60,000 crore market cap, which is what the IPO is coming to you at, it's essentially at about 24, 25 odd times. It's, I guess, in line, be slightly more expensive than, pure brokers like Angel, which I guess comes to mind. Devin, I don't know if you have any thoughts here. It's the capital market play, very, very fast rates of growth, and of course, the dominant player in the segment.
Yeah, Prashant, I think till last year, probably, I think they have had the situation of losing money. FY25 has been, I think, a rewarding year for them. Maybe see some kind of a corrective strategy as well. Going forward, I think the two areas where probably I think the challenges will continue. One is going to be the discount brokerage business, I think, and also the other one is I think the commission business, which is being driven from mutual fund distribution. That's where probably I think if any rules are tweaked as far as the commission payable to the distribution is concerned, it could have an impact going forward. But as of now, I think these two areas, particularly the brokerage segment, which contributes almost about 80% of the revenue pie of the business. But post-IPO, as we understand, I think the larger amount of emphasis is likely to be on the MTF side, the margin funding side. And that's where probably I think the company might end up giving some balance as far as the revenue and the profit outlook is concerned. Well, the valuations, I think most of the consumer tech companies, fintech companies today, I think are fully pricing their IPOs and I think come with a higher premium into the market. So valuation is not something which I would remain very comfortable with. But yes, I think the growth opportunity remains convincingly high in this segment of the business. So you would keep an eye on it.
Okay, all right, Deven, always good having you on the show. Thanks a lot. Have a good evening, good holiday tomorrow. We catch up post that.
Thank you, Nigel. So
Time to slip into a short break. On the other side, we have Shibani Sirkar Kurian, who's waiting for us. She'll give us her view on the markets. Don't go anywhere.
Welcome back. We've got Shibani Sirkar Kurian joining us from Kotak Mahindra Asset Management Company. Shibani, good to have you with us here. Thanks for joining us. Any idea? I mean, it's a day-to-day question, but it doesn't, market's finding it extremely hard. It's still that 500-600 point range, isn't it? 25,700 or so on the downside and 26,100, 200 on the upside. Just your thoughts on what we're seeing out there today, and what do you think the dominant drivers are, Shivani? Earnings, I thought, what's come out so far, and I've seen some summaries. There are no big upgrades, but there are no disappointments either.
Yeah, hi, good afternoon, Prashant. So if you look at just the month of October, and of course it's very short term for the market, October saw some degree of stability for the market. This was primarily on account of, one, the policy support that the market received because of the GST cuts, as well as when you look at the earnings season, as you rightly mentioned, earnings trends in terms of growth seems to be bottoming out, and downgrade cycle possibly seems to be coming to an end. All in all, when you look at our markets, if you look at on the policy front, there has been a policy support which has been to the tune of almost 1.6% of GDP. But of course, global headwinds remain and uncertainties remain, which means that in the near term, we will still have to possibly navigate through volatility. Now, coming specifically to earnings and valuations, one is that if you look at the Q2 earnings trends, as I mentioned, the downgrades in earnings, which was possibly impacting markets over the last few quarters, seems to be bottoming out. Numbers so far have been largely in line with estimates, and some pockets of improvement visible in sectors, for example, like banking, which is large for the market. So our expectation on earnings is that second half of FY26 should be better than H1. And in that context, FY27 should see improvement to mid-teens earnings as compared to high single digits for FY26. Now, valuations, especially for large caps, remain reasonable and supportive. For mid caps, valuations are somewhat elevated, slightly higher than long-term averages. But here, if you look at the broader market, mid caps have been one segment where earnings growth remains fairly strong, and therefore there are bottom-up opportunities. The segment that we are cautious on is the small cap piece, where both valuations are elevated and earnings has been disappointing and muted. So near term, I think volatility possibly remains, and any resolution on the US-India tariff front could be a trigger. But overall driver for the market going forward will be the earnings trajectory.
Got it. Hi, Shubhani. Good afternoon and good to see you. And as always, earnings. Money flow, will follow where the earnings are. And if that is the case, then we could be welcoming back, all the foreigners that did leave our shores. So let's see whether or not that happens. The other point, Shubhani, is the supply of paper. Every time we talk about this domestic liquidity, which is very heartening to see as the equity cult develops in India. The problem is a lot of these IPOs, they are coming in there, hitting the market and draining all of the liquidity. And once earnings season gets over, again, we'll see the fresh supply of, paper that's likely to come in there. Block deals, promoter stake sales. You could argue that it comes back in the market, but still, that's, I think, weighing on sentiment as well. Your take?
No, so I would agree with you. So on one hand, as you rightly mentioned, the domestic flow, especially from the DII side, has been strong, and that has been supporting the markets. FIIs have been net sellers calendar year to date, though some amount of that FII selling has abated in the month of October. The fresh supply of paper, which is hitting the markets, is possibly something that is also weighing in terms of the overall market up move. And we'll have to see how that really pans out. But if you look at India today, especially in context of the regional countries, especially on the EM pack, again, as we know that calendar year to date, India has been an underperformer. Today, if you look at just valuations, India's premium to the EM pack is now down to its long-term average levels. So there has been considerable contraction there because of the underperformance. So if you look at the market setup today, it is possible that markets see volatility and consolidate in the near term, but the earnings trajectory does seem to be on the up move. Some moderate improvement in earnings going into the second half of the year. Policy remains supportive. One will have to possibly see where risk reward is favorable. And in that sort of a market, our belief continues that large caps do offer better risk reward. There are opportunities in the mid cap space, but small caps remain a segment where we are cautious on. So there are a lot of positives, but as you mentioned, there are segments which we need to watch out for and be cautious. And therefore, in the near term, some amount of volatility is something that we will have to navigate.
Do you participate, Shibani, in the Grow anchor book?
Prashant, unfortunately, we can't speak about specific names. Whatever is there in the public domain is there for everyone.
But you've got adequate representation in your as weightage in that category, capital markets, right? I mean,
If you look at capital markets as a segment, this is a segment which we have been fairly positive on, and specifically within that segment, the asset management piece, as well as the distribution or the wealth management segment. These are segments that we have been positive on, and we believe that there is a long runway for growth. Now, of course, in this pack, one must also be cognizant of valuations. There has been significant outperformance where some of these segments are concerned, and therefore one has to be selective as far as picking stocks where you still do see risk reward in your favor. But in terms of runway for growth, we believe that the asset management piece as well as the wealth management piece, the growth runway remains fairly strong. One will, of course, have to watch out for any regulatory changes if they do come about, and we'll have to see how that impacts earnings going forward.
Okay, all right, Shibani. Thanks a lot for joining in, giving us your view. We'll keep in touch. Have a pleasant evening. Holiday tomorrow, so rest it up. We'll catch you soon.
Thank you so much, Nigel.
Well, time to slip into a short break. Come back. We'll get you some technical trading calls. I'll give you a quick update into the F&O market as well.
Okay, well, 3:10, which means that we get the buy today, sell tomorrow kind of ideas. Tomorrow, of course, is a market holiday. But what is on the table? Mitesh is with us to help us with that. Mitesh, good afternoon again. What do you have?
So, Prashant, just hanging around 25-600, still not sure which direction we are heading towards. But BTST on SBI can be considered with a stop at about 950 to half for targets of around 967 to 970 on the upside. And STVT and solar industry, slightly liquid stock, but the stock is near the day's low. The charts are slightly negative. So take a stop at 13,661, look for targets of 13,570, 560.
Okay, all right. Specific short-term trading ideas from Mitesh, helpful. Thanks very much for that. What's the F&O? What are the F&O data points telling us on this expiry day? Nigel is now standing by with that. Nigel, over to you.
Well, last 30 minutes and then we get into a midweek holiday. So great news out there. However, today's weekly expiry, and I think that's what's weighing on the markets today. And that's why we're seeing this sort of a downtick, particularly in the last 60 minutes or so. But it's not too worrying, I would say, because the India VIX is still cooled down. It's closer to the lower end of the range. It had gone down to a sub that 11 odd. And now even on a market that's down 160 points, the VIX is still cool. You're on the VIX to spike up. Now that's an indicator with regard to the fear index, actually. Going by the options data, most of the premiums are almost down to zilch. That's the broad range that you're seeing on the screen. I think we should expire in this range. If we can break those levels on either which side, maybe we can get another 50 points. If you break the 25,650 level, you could have a quick 50 points on the upside. And you wouldn't want to break the 25,550 level because that's where the 20 DMA comes in at. So that's the broad range with regard to expiry. A few stocks are moving down, but it appears more lightening up positions. MCX has had a good run. There is some money being taken off the table out there, and there appears there is some unwinding of long positions out there. SAIL as well has had a good run. The numbers are pretty okay as well, but post that you've seen that there has been some unwinding of positions, and that continues even today. But there has been good amount of addition on a couple of stocks. Hitachi, that one, it's normally not very, very active in the F&O market. Today, the volumes are the highest I think we have seen in very, very long. So that one, in fact, big open interest build up out there. And delivery, one of those relative underperformers, massive open interest build up in a market that's a little bit wobbly. That's an outperformer. Stock up. And big open interest build up as well. So keep an eye out on that one as well. Back to you.
All right, Nigel, thanks very much for that. That's the F&O stats. Well, earnings for Sun Pharma will be released. I think numbers are tomorrow. Vinny is here with details. Vinny, what is the street expecting?
Hi, so this time from Sun Pharma, we are expecting an overall revenue growth of just 7%, EBITDA growth of 3%, while in terms of margins, we are expecting a contraction of around 100 basis points. Profits expected to see a decline of 2% as well. Now, US sales that are expected to grow at around 2 to 3% sequentially. US sales expected somewhere around $486 million, and this is a Kotak estimate that we have. Global specialty sales, that's expected to grow at around 5 to 6% sequentially. Now, growth in the specialty sales, mainly we are expecting it to be led by Lexelvi drug as well as Ilumya, which is an important drug for the company as well. Winlevi, these are some of these important drugs which will lead the growth in the specialty sales. India growth, what is that expected? 8 to 9% growth over there. Margin pressure mainly because Revlimid sales are coming off, so there could be some pressure because of that as well. So overall for Sun Pharma, we are expecting just a 7% growth. Commentary in terms of Trump tariff for branded portfolio, where do they stand in terms of that? What is the impact of that? Overall guidance for the company, GLP-1 opportunity in India and Canada, halal facility for the company that had received an import alert since 2022, and in June 2025, it was then classified as an official action indicator. So any update on that front would also be important for the company, and any price erosion trends in the US is something that we'll be watching out for.
Vinny, thank you very much for that. It's a keenly watched number in that sense. Now, Bharti Airtel's management, speaking at the earnings conference call, answered questions related to the possible impact of the AGR dues case. Directionally it's positive because we're talking about relief. Size of it, of course, which is what is unknown at this point in time. There was also a question and, of course, a response with regards to their creeping acquisition in Indus Towers. Listen in.
We've always said that the AGR judgment, which we sought reviews on around calculation errors, was something that having lost was a disappointment for us. So in that sense, we are pleased that this has been allowed for a reconciliation by the court. We are now going to be taking it one step at a time. So first, we're going to reach out to the government, and that is something that the company will do over the course of the coming days. Then we'll take it from there. I think, for us, we see Indus as a very clearly undervalued asset. It's a strong dividend-paying company. It's a vital infrastructure for us. And therefore, given all of these reasons, we've taken up the stake there. Or we are proposing, we've taken an enabling provision to take up the stake there. And at some point, based on how things play out, we will look to activate that provision.
Okay, all right. Jay Bala is now joining us at Cash the Chaos. Jay, good to have you with us here. Thank you very much for joining us. What's the picture? What are the Nifty price action telling you in terms of where we are headed? Where is the next impulse, up or down?
I'm still anticipating the market to test the all-time highs, Prashant, and I don't want the Nifty to print 25,330. As long as the markets can hold about 25,330, I think the possibility of markets testing fresh record highs is still there. And if today's low might be the completion of a correction from 26,104, and crossing 25,802 would be a confirmation that the markets are finishing a correction.
Okay, all right. So you continue to maintain that positive bias that you've been having, right, Chair?
That's right, Nigel.
Okay, and what about the Nifty Bank? It's gone to that 57,500 odd mark, and then it's been bouncing from there. But on the upper end, it made that high at around 58,600, and from there it pulled back a little bit. How is that looking? Is that going to be the leader?
Yeah, that's a good point, Nigel. I think pattern is going to get passed from the public sector banks to the private sector banks. I think the Nifty private banking index is signaling an important message that it's due for a bounce. And so far, public sector banks like SBI, Bank of Baroda have been leading the market. And I'm quite positive pretty soon the battle will get passed to ICICI and Axis Bank and HDFC Bank. They are coming to an important support. So I think the banking sector is likely to take lead from here on.
Okay, all right. Just coming back to you, Jay, try to fix that connection. But let's focus on another big deal from the metals pack. And it was long awaited. Many times we have had the management of IMFA here on our channel itself. And we have been, quizzing Mr. Panda. Is there some inorganic growth? And repeatedly he said he cannot comment. But finally, that long-awaited deal that the street as well was sniffing has happened. IMFA has gone ahead and bought Tata Steel, part of Tata Steel's ferrochrome business. They bought a unit out there. That's the unit that's located at Kalinganagar. Now, the acquisition cost, street was fretting whether or not it will be 1,000 crores plus or something on those lines. It's at around 610 crores, which is a very, very digestible number. But there will be some value of net working capital as well that which is in addition to this. The timeline is next 3 to 6 months, they're expecting it to close out. So by the end of this fiscal, this transaction should get closed out. The current capacity that IMFA has is around 2.84 lakh tons. Now, they're already adding close to 1 lakh tons organically. So that was already the street was working with, and that is expected to come in the middle of 2026 itself. Plus, you'll have 1.5 lakh tons that will be coming in from Tata Steel, which I understand 50,000 is not yet operational. It's not fully operational, while 1 lakh is operational. But put everything together, organic and inorganic growth, they'll effectively going from 2.84 lakh tons to around 5.34 lakh tons or thereabouts. What we need to know is, to get this entire unit up and running, what is the cost? That will have to be added to that 610 crores. But this could be a big event. Currently, they're doing an EBITDA of roughly around 550 crores or thereabouts. But they're doubling their capacity. So effectively, the EBITDA number can move up. And remember, there's a tailwind because globally, chrome ore is not available. And chrome ore is the raw material that you require to make ferrochrome. So that is, not in short supply. While for IMFA, they are backward integrated. Their mines run all the way till, for the next 20-25 years uninterrupted. So backward integration is something that holds them in good stead. They can source some part of the ore from there and feed it to this ferrochrome plant as well. So big scale, big uptake in terms of EBITDA. And that's why the street will like what they see. However, the stock is at a 52-week high. So the question is, has it run its course, or is that the big re-rating event? Because the market capitalization is around 6,000 crores, current EBITDA of around 600 crores. So it's trading at around 10 times EV upon EBITDA. However, if that EBITDA number can scale up, then that will make things a little bit more interesting. We'll try to get the management in the next couple of days on the channel and quiz them on these aspects. Slip into a short break, come back. Hopefully, we'll have Jay back with us. Stay tuned. Okay, all right. Welcome back. Markets, we're going to be going home towards the lower end of the range. But as we said earlier as well, this is more weekly expiry related and maybe taking off some money off the table as well. Let's get in Midesh back. Midesh, you have any fresh calls for us? There are a lot of stocks actually that are moving lower, but quite a few stocks, in fact, are moving up. Thangamayil Jewelry, that stock has done very, very well. Stovecraft on the flip side has seen a lot of selling from the recent peak. Imfa is another stock that's run up considerably. We have a deal that's announced, but that it's selling on this news. Any view on any of these names?
To be very honest, I think, not tracking most of these cash stocks, but what is on my radar, I think, is Titan has given a good break today with price and volume action. That could, even in a weak market is holding out well. That could actually, on a positional basis, head towards 39,84,000 zones to begin.
Okay, Titan, that's the one that you're tracking. If you could give us your view on Eternal. I wanted to ask you about this stock. I recall on the day they came out with a set of numbers, initial numbers that did come out created a lot of excitement. The stock went dancing away to 360 odd. Then there are concerns that they're going for volume, profitability could be back-ended, which was a bit of an issue. The stock actually has corrected from 360 on the day of results to around 310 rupees. What's your view?
So, Nigel, on Eternal, we just kind of taken some profits off in short position. So I just started position, so I would not be able to comment on that. But obviously, since it was a put option position, the view was negative, but I'll avoid the levels and the other things.
Okay, all right, got it. Let's go back to Jay Bala. Thanks, Mitesh, for that. Jay, you want to fill us in with a couple of your trading calls?
Yeah, I have two for today, Nigel. The one is, both of them are similar. The one is Graphite India is breaking out of a head and shoulders continuation pattern. A stop loss of about 505 for a push towards 4 digits, roughly about 1,100 mark. Force Motors is breaking out of a short-term trend line, and that can also be interpreted as a inverse head and shoulders pattern. A stop loss of about 16,100 for push towards record highs at 21,990. Both these calls are for the short term, and you might want to reduce positions because position sizing, because we are at the late stages of this rally, so lower position sizing than usual.
Yeah. Got that. By the way, just your thoughts, Jay, on Indus Tower. How is the structure looking?
I haven't looked at it recently, but most of the stocks within the telecom-related space are looking quite reasonably good. In fact, I had last week Bharti Hexacom, and if you look at Indus Towers, it's putting in a double bottom around the 305 mark. And if you had to take out 430, it will be a breakout for the medium term. But the short term is looking slightly, positive. But 405, that will be 430 will be the important level for the stock to cross. If it does that, it will be a big breakout for the stock.
When you look at the markets and try and look for pockets of strength and pockets of weakness, Jay, apart from what we've discussed, you want to just tell us pockets where you'd look for ideas, both to go long and go short?
Yeah, I would be looking at Nifty private bank sector for a one-day reversal to happen. If that happens, I think the pattern is getting passed from the Nifty private sector bank to Nifty public sector banks to Nifty private sector banks. And I'm also looking at Nifty real estate sector. Watch out for it's coiling up very nicely, and it's a bullish consolidation. Probably it may take a few weeks time, may not be a few days, but it's setting up in a bullish fashion. And we remain bullish in the OMC space. Negativity is probably coming in.
I think Jay, we'll try to fix that. Thanks for joining in. Well, we'll have to wind down, but let's pull up a few stocks that have moved quite well in the last few minutes. Banco Products, that's coming one of the top volume buzzers. In the last hour, Banco Products, that's up close to 13%. SAIL as well has seen a bit of recovery from the low point of the day, so I should think we should get that one up. Genus Power, another stock that saw a sharp correction. Intraday chart should come up for you. Genus Power moved to the high point of the day.
I just pick up on some of the stuff where Nigel left off. Actually, lots of interesting moves today. So continuing on the broader market aspect, right? There is Tattva Chintan, which was a big mover today, volume-led gainer. LG Bala, which was up, actually it's up almost 30% in 2 days flat. The other 40% mover in 2 days is, of course, Tangamail. Goes home with about a 17% gain. These standalone refiners, MRPL 4% off the highs, but Chennai and MRPL both looking very good. Jyoti CNC was another one which did very well. There was, of course, I think as we've been talking about, the MNCs, Hitachi and 3M both doing very well. TBO Tech, another one which soared, and City Union Bank, which goes home with some very strong gains. Hero is the is the number one volume-led loser today. 5% cut on a stock the size of Hero. NetWeb has lost 10% flat in the last 2 trading sessions. And of course, there was negative news flow on ADAG names, and all of them, I think, pulled back. R Power down prominently on volumes. Blue Jet, MobiKwik, Home First, Premier Explosives are some of the other big volume-led losses that we had in terms of today's session. So, holiday tomorrow, but we basically end at almost the day's lowest point, 25,587 on the index on the Nifty. Well, don't go anywhere. Jay, of course, is going to run you through more of his opinion. Markets Forward will pick up on the action and prepare you for the day after tomorrow, which is the next session. Stay with us.